Hello, I'm James Gransby, Vice Chair of AISMA and Partner at RSM Accountants. So I'm going to answer two questions today, one about employment status and the other about charitable donations. So here are the questions. The first is to save on costs. So we're looking at a 13.8% employer's national insurance. Could we pay locums and bank vaccinators as contractors? That way we could pay them a slightly higher hourly rate. The problem with this is the employment status is determined by tax law. You can't choose based on preference, so you have to look at the legislation. Now the best place to look at this is the Checking Employment Status for Tax tool on the internet, the CEST, C-E-S-T. Now you'll be taken through a series of questions to see what employment status that person, that worker has. I did this at the weekend and the result came back, there was 29 questions. The result came back unable to make a determination. Now that's not unusual, but it's not very helpful because you need a binary answer. Are you going to employ these people or allow them to be self-employed? The problem with the nature of this work is some of the questions work around direction and supervision, which you'll be having control of over their hours and what they're going to be doing when they're working there. Substitution, so that's whether you'll allow them to let somebody else come in and take their place. That won't be particularly relevant in a COVID vaccine centre. And also using of own tools, which won't be relevant either. And those are three big key ones as to whether somebody's going to be self-employed versus employed. So on the basis that if you get this status wrong, it will come back on the employer. So if you accidentally pay someone self-employed, they should have been employed. The tax and national insurance obligations will come back on you. So my advice is, and there'll be lots of people out there listening to this, so different things on the ground, you won't all fit into the same category, so I can't give a carte blanche answer, but if in doubt, payroll is the safest answer, which would mean that you pay the 13.8% national insurance. That's just the reality of the tax law. If somebody comes and says, can you pay this money into my company instead, then you fall into the normal rules on that in terms of IR35, which you may have come across with your locums. And again, you can use the checking tool, but again, it could come up with that unable to make a determination. Like I say, there isn't a carte blanche answer apart from the fact that if in doubt, put it through the payroll. Now, for those who are vaccinating care home residents and staff, there's a different mechanism there because NHS England said, please make sure everyone is paid through their normal employer and then it can be coded and reimbursed. But with the non-care home vaccines, it's saying that payment arrangements need to be determined at a local level, so that hence the question. So I'm afraid probably the answer is you won't be able to choose whether to save on costs and pay the person at a slightly higher hourly rate. That was the first question. Second one is we have some clinicians volunteering who want their payment to go to charity. Are there any tax implications? Now, charitable donations, most of them these days are paid under gift aid, which allows the charity to claim extra tax back at the basic rate percent, 20%. So if you give them £80, they can claim another £20 to make it up to £100. Because the employer is going to be either a PCN or a practice, they can't make gift aid payments. It's only individuals that can make gift aid payments. So the bureaucracy behind trying to make a charitable donation from a partnership and claim gift aid would be very tricky. You'd have to nominate one of the partners to make the payment on their behalf and reimburse everybody. So very difficult, but overriding that is if the individual controls what happens to their payment, then it still gets taxed on them as if it was theirs. So if somebody came to you and said, pay my salary into my brother's bank account, for example, it would still be taxed on them, and the same is true if they wanted it to go to charity. If they said, if at the beginning it was silent and the partnership said, well, because you haven't charged us for your services, we've now been able to make this donation to charity on your behalf, then that's a different story. Still the trouble with the tax relief on the gift aid. So long story short, if they want to gift aid it, then the best way is to pay the individual in the normal way through the payroll. They can then make the donation in their own name. The charity can then claim the gift aid back. They can claim the difference in the tax on their tax return. And all that's lost in this is the couple of % national insurance for a higher rate taxpayer. So I hope that's been helpful and hope to see you soon.